I work with the Ministry of Economy and Tourism, UAE federal government. My remit there is I cover the, I'm a precious metal expert supporting the anti-money laundering department, look into good delivery standards, which we all know as the UAE good delivery standards, and also it's mandatory in UAE that all the refineries that are operating have to follow the response sourcing. So I review the response sourcing for the refineries across UAE. Here's where I'm trying to bring in a bit of my expertise in this subject. Beyond conflict, how gold supply chain risk assessment has evolved and why it now requires a deeper and risk-based approach. So just touching upon what Vasubhai was talking yesterday, was mentioning yesterday about the various standards and guidelines. So over the years, things have been changing quite fast. It's not just about one single standard. The standard has a basis. Basis is the OECD guidelines, OECD's due diligence guidelines for sourcing from CARA countries, conflict-affected and high-risk areas. So that becomes the basis, and based on which various standards are being developed. And definitely has various commercial implications when you adopt a standard. And now would say that UAE being currently the only country where it's UAE and Turkey, early it was Turkey, where it's mandated that all the refineries that are operating has a response sourcing standards being followed. So this is where we need to look at the complete paradigm shift that's happened over this period. So in pre-2010, because it was only in 2010 the OECD guidelines were actually was being structured on sourcing from conflict-affected and high-risk areas. So before that, as Vasu was mentioning, it used to go to every other refinery globally. It used to be traded across any financial institutions. But yes, it was necessary to bring in the standards. It was necessary to have the industry progressively engage with towards the development of artisanal and small-scale mining, progressively engage in ensuring that the conflict-affected gold is not passing through the formal supply chain system. So that's why the interest development started happening, and we started seeing RMI, Responsible Minerals Initiatives standards, LBMA standards, the Dubai Good Delivery, which was earlier known as, now it's known as UAE Good Delivery. You have the RJC, Responsible Jewelry Council. So, and over these years, the focus was largely on, has it been responsibly sourced? When we say responsibly sourced, is it coming from high-risk areas? When it's coming from high-risk areas, are there enough due diligence being done? Is the Minamata Convention being followed? The progressive reduction in the mercury usage at the artisanal mines being followed? Because nowhere we are saying that we shouldn't be sourcing from artisanal mines. It's the bread and butter. It's like a corporate society that kind of works there. The mining happens at the backyard of every homes in the gold-rich countries. So it's not about not sourcing from, it is about what is the due diligence that you conduct in sourcing from these countries, being responsibly sourcing it. So that's why it is. From there, what eventually started happening is, that's where today in the last part, multi-risk reality. So what eventually started happening is, given the vulnerabilities that is being developed, because these supply chains are in a low governance locations, the possibility of the influence that one could bring in through either muscle power or the financial power. So all those things started creating a lot of challenges across the supply chain. Those risks started getting transferred into money laundering related risk related to financing conflict, further financing conflict. Countries where the conflict wasn't existing started seeing conflict just because there is gold mining there and the supply chains were being routed through this. So this is where the risks were being. So gold risks are now systemic and interconnected. So the sanctions, the sanctions evasion, AML and smuggling chain, and the When we talk about sanctions evasion, goal used to primarily bypass sanctions is it's all been discussed over long that a 1 kilo bar can be easily carried than, let's say, a 10 million rupees, right? So so somebody who wants to somebody who's sanctioned, for them to carry it in the form of physical gold is a lot more easy, and then remove it to the formal channel becomes further easier. And this is where so what I'm listed here are the various risks that have emerged over these periods. And it's not just about the risk related to how it is being mined. It is about the, the value chain, the beneficiaries in the value chain, uh, which needs further due diligence to be done. So AML and smuggling chain. So smuggling, through smuggling, it goes to smelter. It can go through even the various central banks that are operating. And there is a further legitimization that happens through the complete process. Just because it's coming through a central bank, not necessarily it means that these goals are, the goal that is being supplied is has followed the required due diligence there. Just because it is being supplied through a government appointed agency in these specific mining countries doesn't mean that gold is coming, there's enough due diligence being done also. So this is where the actors who are in the, unfortunately, many of the actors in the upstream, I would say in the refining as well. So refining, who are in the other regions, they would have to strongly engage in the market to understand where this gold is being coming from, or who are the beneficiaries who are supporting this supply chain from the mine to the sourcing agency. It goes to aggregator, and aggregator to the government appointed sourcing agency. Because there's a potential of various tax evasion that happens there. Multiple informal economies are being created in those regions. And TF. There are various countries across the Western African side. Further, when you look at it, Mali being a good example. You have read quite a lot about what's happening in the northern side of Mali, and how the forces, the sanctioned forces, that they are started covering into the southern Mali, and the supply chain, the complete supply chain of Mali is getting impacted. So, but then still Mali exports annually quite a significant amount, 100 plus tons, close to 200 tons rather. So, what is it when you're sourcing from Mali? What is the level of due diligence? It's not just about, again, are there any incidences? Have you done enough due diligence to consider whether or to understand who all are the actors in this supply chain? Because in most of the cases, at least here in India, everyone carries an Aadhaar card. It's not necessarily that's never been the case in most of the mining regions. It's only because of the response sourcing initiatives started coming into play. One of the really good things that's happened over these years, over the last 15 years, is many of the miners are currently having an ID card for themselves. So that ID card becomes a means of verifying that from where they are actually sourcing from where they are legitimized to be mining, running those mining operations, and then eventually supplying. We actually have a good expert here, Meenakshi Sundaresan, so who's traveled across Africa and seen what it takes to do the ASM mining. So I would consider your opinion quite valid wherever if you defer it. So and rise of resource nationalism, which we have quite seen recently in the Burkina Faso or Mali, being two good examples which we are seeing. Which, there's a more control that's coming from. I can't directly say that. I wouldn't anytime say that the military government countries are creating a risk. It's not about that. It's about what is the level of funding that they're getting in for controlling these mines. So many of the large mines that were operating in these regions, they all are coming under the control of the incumbent government that's running those countries. And it's not that it's not getting supplied. The risk doesn't get transferred to other countries. It is getting transferred. It is getting to formal channels. And as it continues, it goes to unless we know the end use where it is being used. So the possibility of conflict financing is only increases. The way we can argue against it is only if we are seeing some good developments happening in these mining regions, which technically has not happened in many cases. So are there any good governance developments that's happening in those regions? Not really, other than channelizing the goal through specific agencies, government controlled agencies. Are there any changes happening in any of the regions, like let's say Burkina Faso? They have set up 3 or 4 aggregation agencies across the region. So their ability to collect would be quite minimal compared to what Burkina Faso actually mines and exports. So, those are the kind of evaluations that one would have to do in terms of who are all the UBOs there. Because today, when you go and visit any of these places, you would find it would be less of Africans or the locals who would be mining, who would be operating in those countries, because miners would be typically the Africans also, but the whole control would be with some other nationals. And when these controls are some other nationalities who are putting their resources, where is this money coming from? Where is the funds coming from? Are they adding to the risk to the overall global? Are they contributing to terror financing? Is it what I would say? Yes. So this is what I'm trying to explain here on the state participation, export controls, and the risk that is being created, and the compliance implications. Because it eventually, so this is where again it's an integration when you embed the anti-money laundering rules into the responsible sourcing. What you are trying to do is you are trying to mitigate the various risks related to this, because you are bound to know who the beneficiary is, from where it is coming from, who was the what is the source of funds that's gone into these supporting these mines. So why traditional due diligence is no longer enough? So we have seen this paper-based documentation and country of origin focus. So paper-based documentation, many would know that about the supplies from the Great Lakes region. So there is an appointed body that certifies gold supplies from the Great Lakes region. Is it really? But the volume of gold that moves out from the Great Lakes region compared to certificates that is being issued is quite significant. And why is it that one is not going for this certification from an appointed body whose service has to be taken, and because they are the one who provide the chain of custody documentation related to it. Secondly, again, let's say a government body, if it's coming through one of the government body, a good example to quote here is last year at Accra conference, the Gold Board's CEO publicly stated that I can't, I do not have information that all the gold that is being coming from various mines is all responsibly sourced, because I do not know which location is coming from. Currently, our policy is to source and aggregate from through the appointed aggregators, not beyond that. So government do realize, many of the aggregation companies, they do realize that there are these challenges that is there. But when these challenges are there, it's become really important for the players in the upstream as well as in the downstream, if I would say put it as traders, to be equally engaging with with the governments and progressively work towards mitigating this kind of risk, or at least identify the risk and mitigate it over a period of time. So having a static and periodic assessments, annual or one-off reviews cannot keep pace with rapidly shifting sanctions regimes. Export bans and emerging policy risk profiles are outdated by the time they are signed off. Yeah, there's one more. So there's been cases where there's been instances where a country is being sanctioned, and still there's gold supplies from those countries has been quite significant. It goes through multiple routes and lands in a refining hub. How does that happen? It's just because the form of the gold is being changed. When the form of the gold is being changed, one wouldn't say it as mined gold. They'll say it classified as a scrap gold. And as a scrap gold enters the system, then it gets a lot more difficult to get to the provenance of where this gold actually came from. As was talking about, a really risk-based approach that needs to be taken forward. Trade data anomalies is something that I wanted to emphasize on. There's a greater emphasis on trade data, trying to say that, okay, country X exported only 10 tons as per their records, whereas the other country importing it, received something like 50 tons. Why is that a trade anomaly? Is something as good as how the registry is being maintained. It could vary, registry being maintained at the export location. It would be about how the gold is being carried. In many cases, the gold is being hand carried. It could be hand carried. Does the regulation in those countries support hand carry, and do the hand carry gold being supported through a commercial invoice? If it is commercial, then it typically has to be registered. So those are the kind of data that needs to be really looked into to qualify whether these aberrations in the trade data does really mean anything. So we need to be looking at risk-less supervision, quite a lot of information sharing, working across the governments. So for instance, we are working India, as was being mentioned, there are about 10 countries from where India is importing from Dore. So is there a way, because you're limited to only 10 countries, is there a way that can be a collaboration with these respective countries to get the data on the chain of custody from each of these countries, and who are the beneficiaries and so. The future is going to be intelligence-led gold supply chains. That is a need for more information sharing. There's been a lot of discussion. There's quite a lot of experiments, pilot tests were done on the using blockchain-based, but blockchain is one of the blockchain-based chain of custody. Has been quite a lot has been worked on, and creating a proper data sharing ecosystem. OECD has actually developed something really good out there on creating a data sharing platform. Then using AI analytics is quite at the very early stage, but convergence of ESG, AML, CFT, and the geopolitical risk, this is at least should be at the basic level that needs to be incorporated at every company level, which you would see that as part of any country's AML rules, this become mandatory. So the question is no longer where gold comes from, but whether we truly understand the risk embedded in how it works. Thank you. Happy to take questions, if any. Good. Thanks.
Thank you very much, sir. For the next presentation, we have Mr. Vishnu Prasad from Emerald.
So very good morning, everyone. How are you all doing? So I'm Vishnu from Emerald. My father-in-law started the company about 4 decades ago. Many of you here may be aware. We process about 20 tons of gold into jewelry and employ 6,000-7,000 people. I got married into the family 3 years ago, and I take care of special projects and treasury and wealth within the group. So over the last 2 days, we've discussed quite a bit about how India could be self-reliant, be the price setter, and become at the forefront of the overall gold ecosystem. Prior to this, I was in the United States. I spent almost a decade there doing different things. So when I see this whole conversation transitioning from, pro gold consumer to how do we be careful about every gram that we consume. So I wanted to share three things. One, how do we maximize the domestic value addition through strategic refining and recovery of gold ores in India. So we all are aware of the fact that since 1971, post the gold standard, what was $35 an ounce has translated into $4,500 an ounce, which means dollar against the gold has depreciated over 99% or more. That is how I see it. We always say gold has appreciated 100 times, but dollar has depreciated 99 times. And again, silver and then INR in the context here. So gold is, of course, trading at the highest average daily prices in 2026 than in any year historically. Let's move to the next slide. Excuse me. Okay, got it. So the dependency dilemma that we are currently stuck in is we import over 750 tons of gold, regardless of what the price movements are, and the domestic mine production is merely 1.5 tons, which means 99% of the reliance is on the imports, right? We are basically importing other nations' value addition. So I want to share a small point here. A year and a half ago, at Emerald, through our DMCC entity, we have invested in a few mining companies. Mining companies start with explorers, and then developers, and then emerging producers, and then the royalty companies. So these people are the ones who produce the gold, and then they sell it in the global markets. There are the major mining companies like the Barricks of the world, and then there are the junior miners. Most of our investments have been themed around the junior miners listed in Canada. All these, about 1,000 of them are listed in the Canadian exchange. And most of these mining companies even now are trading very attractively, even though they have given a 300% returns over the last 1.5 years, because the all-inclusive sustainable cost of mining is less than $2,000, and whatever the incremental value or price in the gold is adding to their profits. So one of the strategic ways, when I was looking at, there was a lot of restriction even back then for a company from India to be taking part or investing in either these explorers or developers or emerging producers to own the supply chain. In India, Indian Oil Corporation, HPCL, all of them own oil wells worldwide. I was just referring to it, that contributes to about 3 to 4% of the supply of India. So strategically, if India is to consume 700, 800 tons of gold, allowing and enabling and incentivizing Indian corporations and entities like us, and also as a state, to invest from the starting point in the value chain at the exploration level to the development level to the production level to the royalty level, would ensure our supply chain is not dependent on the forex currency getting drained out. So that is one point. And then I am also going to talk about the Switzerland and the Japanese model. Switzerland has taken over the doré refining. They process about 1,500 plus tons, and they are the finance provider for most of the people who are selling doré bars. So, and again, if you look at the Japan and the Korean model, which is the value realization model, in fact, last year IGPC-IIMA has published a report around the strategic refining that's happening in Japan and Korea, where they export over 200 tons of pure gold, right? So that is about 20 to 30% based on the customs data as far as the value addition is concerned within Japan and Korea. So they process complex polymetallic ores as well as concentrates and extract the precious metals out of it, and then export it to all the countries worldwide. While the demand within these jurisdictions and locations are very limited, there is neither supply nor demand, but they have emerged to be the global refining hubs, right? Swiss and Japan and Korea. So how India could be one is a direction and is a way that we can think moving forward that could enable a huge amount of employment and the governance on aspects starting from sourcing to price setting and the endpoint delivery. Because India has a huge demand. At least we have demand while we may not have adequate supply. So what I refer to as raw polymetallic ores is there are so many different kinds of ores. So there are oxide ores which are more than 50-60% that are either neutral or declining in value. And then there are sulfide ores that can only be processed by a refractory ore processing facility, and India does not have one. Even the ore and the concentrate manufacturing facilities in India recently started in Gujarat are only doing the downstream process starting from leaching. So whereas if you look at Japan, even if you look at Europe, they process e-waste which has 50 to 100 times more gold than most of the ores or any concentrates. And India shreds all the PCBs and the electronic waste and exports it to other countries for the recovery of precious metals within it, right? So I've been studying this and working on this for the last 1 year. Of course, after we started investing into these mining companies and the junior miners, while understanding what sort of output they are selling to whom at what price and what payability, and how is it that we would be able to do something in India that would enable us to add reasonable value from the ore to the pure metal level. And this would help India with massive FX savings by processing the raw materials. While the margin of processing may be 15 to 20%, that money would be retained within India, right? So, and it would create employment within India, and that money would be within India. It would save that much of forex if that ore to the pure bar is processed here. It's just not applied only to gold. Most of these concentrates would have much more copper, much more silver, much more cobalt, nickel, sulfuric acid and everything else than gold, which are all core constituents of what would make what I call as an import substitution, right? Either we export more or substitute the import to balance the trade deficits. So how do we grow from being just a jewelry manufacturer, right, like at Emerald, and also as a country to build refineries? We already have a lot of refineries that refine the doré bar. In fact, we started a pretty large facility, a 1.5 lakh square foot facility that is getting inaugurated in another week in Coimbatore. And how do we go to the polymetallic ore processing level is something the country and large enterprises and entities could think of in the direction. So another aspect of this is traceability. So there is now IRMA and multiple responsible mining initiatives, which Sudesh has recently spoken about. And as India grows and thinks in the direction of moving from the last mile to the first mile, bringing its traceability would be more critical in the next decade and the moving decades forward, right? So as the world is getting more and more formalized and ethical, this is something to be addressed. And how do we do more eco-friendly processing? As we haven't established anything yet, doing anything new would give us the opportunity to do absolutely eco-friendly processing so that we do not harm the nature, at the same time pollute the environment. And then third, there is going to be a lot of black mass circuit boards, auto catalysts that are all getting generated in the country and in the Asian region. So these have precious PGM metals, these have gold, these have a lot of silver, and already Tata, Adani and a few of the large conglomerates are investing in processing of the e-waste. But e-waste is also of so many different kinds, right? So all the lithium ion batteries would produce black mass, and there is so much of recyclable material that the country is going to produce and every solar panel, for instance, has 7 to 8 grams of silver. And now silver is getting more precious and it's an industrial metal, and a lot of industrial applications are dependent on silver for its growth. And when India emerges or sets its standard to create a framework and allow businesses to do the value addition from the ore stage with a green gold certification, that elevates our India's jewelry ecosystem and also our standpoint as far as refining is concerned, and also stick to the stringent of the ESG mandates that are also tightening globally. So conclusion and my recommendation for the vision for India is to bring forth policy reform and expand the MOWR or Gift City frameworks for those who are upcoming and willing to invest in establishing such a facility that would be equivalent to that of a Korean or a Japanese standard, and make the import of ores and concentrates frictionless for the licensed refineries. And then the capital deployment is another major aspect. How does the government or how the Indian enterprises could be enabled to attract more sovereign and private capital to build world-class multi-metal processing infrastructure? And lastly, how do we collaborate and work with the European, Japanese, and the Korean refiners as far as their IP is concerned, and build strong domestic R&D capabilities for the complex source and e-waste recovery that would set forth the stage for not just gold, but also a lot of other precious metals and the critical components that we are dependent on just importing for now. So that's my presentation. I'm open to have a conversation. This was prepared by me in a day. So I just wanted to bring this forth and share these thoughts that I've been working on for the last 1 year, and maybe have any questions or make it a conversation from your end. Yeah.
So one is, I know we have, our refining capacity is maybe about 2,500 tons. Maybe the utilization is only about 30% or so. How do we ensure I know you also spoke about mine, right? What can India do to support the industry in terms of ensuring that we have, the ore, guarantee that we should be able to do it? How do we do that backward integration? The first question. Second is, what is the potential, capacity that we can generate out of the e-waste? I mean, I don't know if you've done the study, just wanted to check that as well.
So I'll tell you, again, this is closed. Okay. So, all right. So, a lot of people, including me, when I was studying when I was getting into the treasury and the wealth management of our group, I was seeing a massive untapped opportunity in investing into these listed companies in Canada that were all junior miners. So they are not multi-billion-dollar companies, but they are all in the range of $50 to $300 million. They are either emerging producers or explorers or developers, because from the exploration stage to the production, it's a 10-year cycle, right? And the success and the strike rate is very, very low. And participating in the exploration to the delivery stage, right now, still they are trading very attractively because most of the capital is deployed in the AI and tech-related stocks in the Western markets, right? So as more money starts moving and as people settle into this reality, the new world reality that gold is going to be above $3,500 or $4,000 an ounce, and the new world reality of a $60 or a more silver, these mining companies would become basically cash cows. They are printing money. The cost of extraction is still the same $20, $25 on silver and the same $1,600 or $1,800 on the gold. With the increasing fuel prices, maybe it is only 10% extra, right? So allowing companies with a better framework of international investments, the reason we had to channel these investments through Dubai was because of international investment mandates within India. Now we are starting a company in Gift City to do that moving forward at a slightly larger level. One. And two, e-waste, while the concentration of precious metal within e-waste is 100 times more, e-waste cannot fulfill the needs of a country like India, because we use 700 tons or 800 tons of gold for import and several thousands of tons of silver, right? But things like silver, even though it may be only 8 billion or 12 billion in imports, could be substituted completely in another 10 years from now, because that much silver is going to be there in the scrap of just solar panels and PV modules as soon as it hits the end of life, right? But participating from this exploration to the development and to the production, and also having world-class facilities to do the refining of it, at least would enable the Indian supply chain to own 15 to 20% of the value in the entire equation.
So, what is the friction in import of ore and concentration of gold that you mentioned in your speech? But I think its import policy is free. So what is the friction?
So I'll tell you, I didn't mention there is a friction. I just mentioned India does not have one. And then secondly, there are two natures of ores that are there. One is the oxide ores. Most of these countries would process the oxide ores then and there, and then like Ghana or any country which wants to own the ownership of the gold, and they export it as a doré bar, right? So when it comes to the refractory or the sulfide ores, India does not have a facility yet to process the sulfide ores. It's A, huge capex, and then B, regulatory risks, right? Of course, one has to follow the environmental and the law of the land and all the mandates, but Vedanta, which was started in Tamil Nadu, is shut down for the last 7-8 years, right? And the policy frameworks that would be consistent and that can give clarity, okay, for an investor or for anybody who is setting up a facility like this would have this in the next few years or for the next 10 years or 15 years to come, would enable and encourage somebody like us to be upcoming and willing forward and make that investment. And 4, port-led infrastructure is just now getting developed in more emerging states in the southern India, and the established ports in the country do not have a port-linked special economic zone where you could get access to hundreds of acres of land, because a small refinery that can produce even 10 tons of gold would require several hundred acres of land for the secure landfill, for the import, for the secure transportation of all these ores, because the moment you put 1 lakh tons of ore into a truck and then move it to a Delhi or even Bangalore, it becomes an unviable business proposition. Most of these companies operating in Korea just have their facility, or even recently I was studying about somebody in Philippines and even Malaysia and Japan. They have a conveyor belt where the ores get moved from the ship to their factory directly, and then the SLF is right next door. They don't have to do any transportation. So the logistics is so tightened, and the port infrastructure, it's a deep water port, right? So.
Vishnu, it's not a question. I just want to really appreciate your one comment you made. It's not USD which is appreciating, it is USD actually is depreciating, right? Today, the only way that USD is currently measured is based on DXY. The DXY has no parlance at all because it's compared against a basket of currency which has no relevance today. So the way to see whether USD is going down is only to check against the gold. It's a fantastic observation you made. Thank you.
You're welcome.
So a quick question, great presentation, Vishnu, here. And very innovative thoughts. So I was trying to connect this to what Sudhish presented just before this, where the responsible sourcing of gold is not a very easy task throughout the world. So when you say that it's a good idea to take stocks or to take shareholdings in the Canadian mines and such companies, so yes, it makes sense, but at the same time, isn't there such risks of compliance, or do you think that just because these are listed companies and they have processes in place, they are responsible companies?
So to answer that question, I'll tell you, there are lakhs of miners who are artisanal, who are small scale, who are not regulated and who are not governed. The moment when somebody comes for a listing, already they have crossed at least 30 to 40 steps forward, and they are trading at least at a $40 or $50 million in valuation, being a junior miner. And 40 or 50 million is what, 400, 500 crores. So they have an organized team, they have a structure in place, they have quarterly and annual reporting that is in place. And many of these listed miners in Canada are also governed and are a part of different organizations like IRMA, which ensures that they are sourcing responsibly. And many institutional investors who invest into these companies also validate the practices that these companies are following to extract and sell the gold, right? So compared to going to an African country and then sourcing gold from there, participating in this equation and the value chain, being stakeholders in already listed companies in the listed exchanges in Canada that have been there around for quite some time, that are also growing, that are also proving to expand their capacities, is a far more safer and an established mechanism to move forward, because they cannot fudge their numbers. They are a part of an exchange. They have to be transparent about all the disclosures. What salaries as a director do they take? And of course, out of 100 companies that are listed in India, maybe 10 or 15 out of them maybe even cheating or have fugitive numbers. But in Canada, I don't even see that much. Maybe 1 or 2% may be fraudulent, but 80 to 90, 95%, all the companies that we've invested in are having very fair disclosures.
All right, great.
Really appreciate. Thank you so much for everyone for listening. Have a wonderful day.
Thank you, Mr. Vishnu. So next we have the set of academic paper presentations, and to chair the panel, I invite Mr. Sudesh Nambiar. Welcome, sir. For the first presentation, we have Dr. Moni M. Welcome to the dais.
Good afternoon. This is actually a methodological one. Many people have gone through this paper early. The title of this paper is Optimizing Gold ETF as a Safe Haven in Crisis Responsive Portfolios. As we know, our market, we are getting the report from 2019. From the early stage, we are getting the report that the individual investors are facing too much loss in derivative segment and also in the spot segment in the equity market. And there are multiple studies indicating that the gold have a safe haven properties against the equities and other risky assets. And now we can invest through the ETF also, and also we can invest through the bullion. And the uncovered economic question is whether the safe haven properties is for long term or for short term or for the medium term. And also there are many methodologies for optimizing these gold into these risky assets still unexplored. For this, we framed two research questions. One, to identify the safe haven properties in different time frame. And the second one is to, does stress triggered rebalancing outperform static portfolio strategies? This is the last century of gold. We can witness from the graph that almost all the market distress, the gold showed a positive movement, upward movement during the market in stress.
Moni, if you could explain the second question, because I haven't understood the second research question.
Yeah, I will explain that question along with the results. Okay. Okay. From the 90s and the recent pandemic, then the Ukraine issue and the current geopolitical issues, we are witnessing the positive trends or positive movement in gold price and the safe haven against the gold, which is unexplored in the scenario. And for this study, have conducted a literature review based on the gold as a diversifier, safe haven dynamics, and portfolio allocation evidence. And we found the research gap as there is horizon-dependent safe haven behavior remain unsolved. And also the ETF's role in the optimization in the portfolio for risk reduction still unexplored. For this, we framed two objectives. One, to assess the safe haven properties of gold and gold ETF across short-term, medium-term, and long-term investment horizons, to develop and evaluate a frequency-informed dynamic portfolio optimization strategy. The data is collected from Bloomberg, which is daily in nature, which is about the small cap, large cap, and mid cap, and also the risky assets such as the Bitcoin and also Forex were sourced from the Bloomberg. The empirical strategy, the first stage is the tile-dependent validation with Kapula analysis. Second stage, horizon dependence with wavelet-condyle correlation. And the third stage is dynamic allocation with heuristic optimization, that is owned colony optimization. And the final one is portfolio rebalancing based on the wavelet insights. And these are the strategies used for portfolios. For the baseline is equity only. Equity consists of both small cap, small cap, mid cap, and large cap. And there are two static and two dynamic optimization strategies. And the rebalancing strategies is for the short term, it is 21 days. For semi-annual rebalancing, it is for 126 days. And moving on to the result, the tile dependence from the Kapula approach displayed that there are some hedging opportunities and also some safe haven opportunities for the gold and gold ETF against these risky assets, such as the equities and cryptos and the forex. But we need to confirm that safe haven property is existing for the short term or for the long term or for the medium term. For this purpose, wavelet quantile correlation analysis is conducted, and we can witness from the upper part is indicating the long term, and the middle part is for the medium term, and the lower part is short term. And the color code is from blue is having some safe haven properties, red is without safe haven properties. Almost all the results showing that there is a safe haven property of gold and gold ETF for the short term and for the medium term, not for the long term. And the robustness of these results checked with bootstrap approach, and the same result we got from the bootstrap approach. And then again, based on these insights from the wavelet analysis, framed the rebalancing strategy, and from the result of portfolio evaluation, portfolio optimization done with Ancolny optimization, and the result from the optimization, we can witness that the baseline equity only, that is comprised of all the small cap, mid cap, and large cap, is the return is 21% and volatility is 17% and maximum drawdown is 29%. But it changed to the optimization with our strategy with gold and gold ETF. The return is increased and volatility got decreased in a sufficient way. This is the stress. The second question, the portfolio optimization based on the stress level. That is the adaptive, all dynamic way. Dynamic adaptive way means it is based on the stress level in the market. If the stress is high, we will optimize with the gold with more quantity, and the others will be minimum. And during the process, there is a cap provided for the Bitcoin. And the findings, the gold exhibit a frequency dependent behavior, and there is a successful short term and medium term safe haven properties against the risky assets. And the performance dynamics, the adaptive portfolio with Ancolny optimization comprised with the insight from the wavelet quantile correlation showed a more return and less risk, and Sharpe ratio also were reduced, and drawdown also reduced from 49 to 24, and there is much improvement in the volatility also. The first ACO-based stress-triggered rebalancing with Indian asset is explained in this study, and monthly rebalancing is optimal as because of the short time is giving more promise towards this. This is the first story, and now we are working on the mechanism, because the optimization procedure is based on the conventional mean variance. And now we are adopting the selective states Mamba model into the framework, because it is an advanced deep learning neural network which is introduced only in 2023. And we have first paper on this mechanism in finance with the optimization for the equity market. And now we are adopting this mechanism into this. In this mechanism, the first we will predict with the feature engineering, the second the prediction with the Mamba modeling, and then we will optimize with the prediction also. This is under process. And the implications, it is the optimization insights is good for retail investors and for the institutional investors. And also there are some policy implication also. It will help to protect the retail investors, as we are witnessing from the 2019. The retail investors are facing loss 80%, 84%, 90%, but there is no solution from the last 6 years. Even it is well reflected in the SEBI's report or other financial report. But these kind of allocation to multi-assets like gold and gold optimization can help the investors, specifically for the retail investors, to reduce the risk. And theoretical contribution, a frequency domain portfolio framework is the first time in the literature. And also dynamic safe haven model is also first time in the literature introducing through the paper. The limitation is it is only the equity market is considered only from the Indian perspective. It can be expanded to the other market, and the other models, the deep learning models or the implementation now I just suggested can improve the quality. Sir, the reference, the highlight, the short time safe haven is more witnessed in the ETF and gold bullion, and frequency informed optimization is giving much better result than the other, and superior performance in terms of the baseline or only with the equity. Thank you.
Question is, what was the basis of taking gold ETF? Because you're looking at only the prices here, the prices and the returns. So what was the necessary to take gold ETF as an instrument rather than the gold price as such?
From the past few years, the gold bullion is there. Past few years, we can witness the growth of gold ETF. And for the investors' perspective, it is more better. It is another study, we are under the review. That investors' perspective is more is they are attracted towards now gold ETF.
Yeah, ETF is instrument, but the study is on the returns, we
can calculate the return from the gold.
ETF. But the point is, it's on the gold price. Then on the ETF is just an instrument. It can be digital gold. It can be gold as an instrument in any other form, right?
Yeah,
So,
there are many forms, but the authentic
the
instrument is ETF. The some other the last, I think in November, the SEBI introduced one report that they are not supporting this some sort of digital gold. So it is authentic, and wherever we can find the ETF it is global standard.
Okay, you just took an instrument for your case, and there's been various studies that were presented in the past few years, specifically in the stress-triggered rebalancing. So, a stress-triggered rebalancing, when it happens, you would have generally missed, especially when it comes to gold, you would have missed out quite a lot of rally, and that's happened in the past. A good example would be there's a good accumulation that happened between $1,700 to $2,000.
Slide.
Can anybody put on slide, please? So between 700 to 2000, there was quite a lot of accumulation happened, and the ETFs actually entered after about 2000, after it crossed 2000 or 2100.
Yeah, the data is started only from 2015 to 2025. The first, it's 10 years scenario.
No, I'm talking about the price.
Yeah. The present study is only about the data we had taken from 2015. The previous we missed, and the rebalancing is specifically this. This is the frequency aligned during the whole period. And I didn't get exactly your question.
So when you're rebalancing during the stress, you would have generally missed out on quite a lot of rally in the gold price.
Yeah, during
because gold always is ahead of the market when it comes to identifying the stress and then moving. that. So indicators like VIX or any of it, you have to look for identifying the stress in the market. Then your entry would be typically later.
Yeah, got the point.
Yeah.
Yeah, the stress we identified from the real data. It's not about the data, the real data. When the market, the risky assets face some stress, which will indicate the downturns, the negative returns. And during that time, we will recheck, validate with the price of these gold and other assets which in the portfolio. And based on the opposite relation, will rebalance. This is the weight given to all the assets during the whole period. It's the rebalancing scheme only based on the downturns in the risky assets. If it is the Bitcoin is going down, then suddenly we will change the algorithm will change the weightage to the Bitcoin and will give to other which is going up, which is moving on the upside.
Got it. Any questions from the audience?
So Moni, I think it's an interesting study you should continue, because the last 3-4 months, when the stress really happened, it also behaved like a risky asset. Yeah, maybe you should continue and look at this last 3-4 months data to see if we can come to some inference.
Yeah, because there are many policies to stop the rally.
Yeah, no, I'm saying, no, I'm not saying, but
That-
it's
that is-
interesting
that-
to study that topic.
Yeah.
You know, because we are
it's a-
trying to see how the future will based on the study, we are predicting how the future behavior should be, right?
Yeah, earlier the gold having three-dimension of the potential, three-dimension potential, because it is in the reserve category, and also it is in the consumption category, and also it is in the investment category. Now the consumption is scaled down, and reserve also scaled down. Now from the recent data, I think it's from the World Gold Council data, ETF is growing. Gold ETF is growing. The others are something like in the straight line, because some policies are there to control this, and it is a contradictory view, and we need to further extend this to the current scenario based on the new policy level. Yeah, thank you for the information.
Okay, in the interest of time, can we move to next? Thank you, Moni.
Thank you.
Thank you, Dr. Muni. For the next presentation, we have Dr. Anil Kumar Pandey.
Thank you, IIM Ahmedabad, for giving me this opportunity. So my topic is basically, there has been a lot of controversies regarding jewelry brands becoming woke. Now you see a lot of, say for example, some 2-3 years back, there was a backlash against Tanishq for, promoting DEI or promoting LGBTQ or promoting interfaith or intercaste marriage or interreligion marriage. So I want to study, this is a work in progress. So my study is titled Celebrity Endorsement, Wokeism and Cultural Economy of Gold Advertising in India. So if you do just a Google search or you will find what is wokeism. So a literature review on wokeism and celebrity endorsement in the gold jewelry industry reveals a growing coalition between traditional trust-based jewelry marketing and modern woke capitalism. Since the Generation X, or Generation Y and millennials, they are more into buying gold, and companies like Tanishq or Bluestone or the new Gen Z companies, jewelry companies, not the mom and pop store companies, they want to tap into this customer base. So they try to bring in more, celebrity endorsers like Alia Bhatt, Deepika Padukone, who have their own, say, and sometimes that can get the retailer or the jeweler in trouble. So socially conscious branding can either build deep consumer loyalty or it can provoke a backlash and trolling. So traditionally, celebrity endorsements in the gold industry, historically, celebrity endorsements in the gold jewelry sectors are rooted in the meaning transfer model. This is a model given back in 1960s where the aspirational qualities of a celebrity are transferred to the consumer. So for example, say a Mohan Lal or for Kalyan Jeweler or Amitabh Bachchan, they stand for something, and when a Mohan Lal tries to become tries to there was a lot of controversy regarding that. So literature focuses on the matches between celebrities and product categories. Very little scholarly attention has been directed towards how a celebrity endorser is associated with the selling idea or the primary cultural value transmitted in this advertisement for gold jeweler. So I did a literature review. It's not that big. So the celebrity endorsement as a potential effective advertising strategy can simplify the process by which the audience interprets an advertising message. The celebrity possesses a unique set of cultural meanings and can bring the meanings into the product he or she is promoting, as said by Macron 1989. There have been some work which says that the celebrity can help greatly narrow down the thematic dimensions of meanings related to the product. Previous literature also focuses on the match between celebrities and the product categories they advertise. Very little attention has been directed towards how a celebrity endorser is associated with the selling idea or the primary cultural value transmitted in the advertisement, mainly gold jewelry. Modern celebrity advertisements date back to 1800. During the last century, it has transcended national borders and become a favorite advertising strategy all over the world. So there are some various attributes or variables. Trust and credibility. I don't like in emerging markets like India, purchasing gold is highly traditional. Even now also studies show that source credibility, trustworthiness and the match-up hypothesis, that is how well the celebrity aligns with the cultural values of gold, are primary drivers of consumer purchase intention. So if the endorser or the brand, the promote the celebrity, it depends on them. So for example, Amitabh Bachchan or other endorser, he may have more ability to make a decision to buy. Risk of skepticism. So conversely, academic literature notes that an oversaturation of celebrity endorsement can lead to consumer skepticism. So you don't need to overdo it. Some jewelers, they overdo it. Using celebrities to endorse high-ticket investment items can trigger backlash if the celebrity lacks financial or cultural domain expertise. It happens. So this is some of the shots. What my research design is mixed method approach. I use content analysis and survey research. So I did took some handles of social media and tried to find out what was the backlash against a Tanishq or a advertisement that happened. The study proposes a content analysis to ascertain the primary cultural values in the Indian celebrity endorsed and non-celebrity endorsed television commercials and examine the relationship between celebrity characteristics and cultural values. So a celebrity versus a non-celebrity endorsing, I tried to find something. The results showed that the Indian gold jewelry celebrity ads are dominated by the Hindi-speaking actors, actresses, and mainly promote modern and utilitarian values. Celebrity endorsers are most often associated with the values of quality, effectiveness, success, status, youth, enjoyment, leisure. The gender and age are stereotypically presented in advertising messages. Study shows a predictable pattern of matching relationship between celebrity endorsers and cultural values and implies that advertisers in India tend to depend on the shared common meanings of celebrities to create these advertising message. So this is the first chart where you can see that the cultural values in Indian celebrity and non-celebrity television digital advertisements. So we look at the celebrity endorsements. So n equal to number of observations, here is 220. And for non-celebrity advertisements, so those are not that much recognized faces, that is n equal to 580. Traditional values, if you see the family belongingness, so a family can relate to that endorser, it is 8.18%. Whereas non-celebrity advertisements, it is quite high, 12.76. So we try to, we use these value themes like family belongingness, economy, respect for elders. So for example, if a brand and if an actor or actress has a deep-rooted, so for example, Akshay Kumar, if he is considered to be rooted to the Indian. So if he is given an advertisement, maybe people will relate. So these are patriotism, national pride, it goes hand in hand. Traditional culture, and these are the things, modern values, enjoyment, glamour, success, all this. So next is, I try to find whether the gender of celebrity endorser in India has a cultural value. So male celebrities, n equal to number of observations 130, and female is 90. There is a stark comparison. Male are more endorsing gold jewelries than their female counterparts. The value themes I took was quality and effectiveness, the status of the celebrity. So if the celebrity is highly patriotic or not, health, wellness, beauty, youth, enjoyment, sustainability. So whether the celebrity is speaking on issues like ESG, DEI, or okay. So we find that these are the table. Then what I find is the age group of celebrity in Indian advertisement. So basically, young celebrities versus mature celebrities. So young, maybe the women or the actresses. So and the mature celebrities like Mohanlal or the other Amitabh Bachchan or some. What we did was beauty, youth 28, enjoyment. So we found the percentage, and this is the age group of celebrity in Indian advertising. So progressive. So I tried to find whether wokeism helps jeweler brands. Yes, jeweler brands, they get recognized when you face a backlash. Because there is a saying that any publicity is good publicity. So there is, for example, values in Indian gold jewelry advertisement. So brand type traditional family jewelers, national jewelry chains, luxury designer jewelry brands, digital first jewelry startups. Then modern aspirational values, 25%. Progressive woke issues, you will find that digital first jewelry startups are more progressive or having woke values. The traditional family jewelers like Kalyan or others, they are less and play safer. Luxury designer jewelry brands also are more woke in their approach. Cultural values in Indian gold jewelry celebrity advertisements. So we found that the advertisements, the frequency that they promote, beauty, youth, 22, success status of the celebrity, family tradition, the modern relationships, sustainability, ethical, luxury is doing thing, ESGs, quality, trust, and national cultural identity, women empowerment. So you can find the frequency. So we can safely argue that the Indian gold endorsement industry demonstrates the coexistence of traditional symbol, capital, and emerging emerging Wokism creates a strong theoretical bridge between Macrane's meaning transfer model. So this transfer model, as I discussed previously, was given a Macrane that said that when an endorser, brand endorser endorses, he transfers his meaning to the person or the customer who buys that product. It also identifies signaling theory. So when an endorser endorses gold, it signals that the consumer buys it, and he may get some add-on values of the endorser. ESG branding, ESG as environmental social governance. So maybe some digital startups in gold, they also promote their brands through ESG branding, and also woke capitalism literature. So what I find that celebrity endorsed gold endorsements in India increasingly employ progressive socio-cultural appeals alongside traditional family-oriented values. So as the Gen Z is taking shape, maybe you will see more advertisements on interfaith marriages, maybe a little toned down. Maybe female celebrity endorsers are more likely than male endorsers to be associated with empowerment and woke culture. So here men play safe. Women, for example, women endorsers, they are more prone to take up these woke issues than their men counterparts in jewelry advertising. Thank you.
I just have to want to add a point here. As this is a work in progress, you may want to look into neuroscience marketing aspects of it. Okay, so that's where quite a lot value is to be added, because when you look at how humans are designed, as we have this something called intrinsic forgetting of thing, or how a transient memory is. So those are all what goes into these advertisements when you specifically talk about wokeism. And so a flavor of neuroscience marketing to this would add a lot more value to it. Any further questions there? Good. Thank you.
Thank you, sir. Thank you.
Thank you very much, Dr. Pandey. Now I invite our session chair, Sudhir sir, to give certificates to our participants. Dr. Moni is not here. So, Dr. Anil Kumar Pandey. Thank you, sir.